options with our various FIDE features. Firstly, let me introduce myself. My name is Tarang Solani. I'm the product manager for derivatives in HDFC Securities. And I will be the host for this session on TradeSmart in FNO with our various FIDE features. So before starting, can anyone reply on the question answer section? Is my voice audible to you all and is my screen visible properly? Request you to please answer on the question answer panel, which is there on the right hand side of your screen. Is my voice audible to you all and is my screen visible? Can I get more feedbacks? Okay, thank you very much. Yeah, thanks a lot. I got a sufficient feedback. So to begin with, now what we'll be covering in this session. Now, in order to make your FNO trading more easier, we have come out with various FIDE features in futures and options, that is various order types, wherein one can use these order types to basically minimize your loss and also trade futures and options in much more convenient manner. So what we'll be covering in this session would be firstly, we'll be covering on various order types like order slicing, GTDt orders, off-market orders, then basket orders, bracket orders, and lastly trailing stop loss order, and also rollover spread order. Along with, we'll also showcase you the margin calculator, how you can use margin calculator to understand if you're doing any kind of an option trading strategies. So this margin calculator will help you to understand how much margin will be required for any kind of strategies if you do, because before doing any kind of strategies, it is always useful that you first check how much margin is required, so that you can based upon that you can allocate the margin and can trade upon. So we'll also showcase how to use that margin calculator, and lastly we'll also give you what are the HDFC Securities offerings, and that will help you to benefit your trade in futures and options through HDFC Securities. So without wasting any time, let us begin with this interesting webinar on TradeSmart in FNO with our FIDE features. So firstly, we'll introduce on order slicing, which is our new introduction in the order type that is called as order slicing in futures and options, which is only available in Pro Terminal, which is our advanced trading portal. So let's begin. What is order slicing? So order slicing in derivatives is an additional feature on the web trading platform that gives an edge to the active traders to divide the large quantity order into multiple orders, which is known as the child orders. Order slicing is important because if it is not done, then one single order, which is of the large quantity, can have a direct implication on market liquidity and price discovery in very next moment. The one of the reasons is to minimize and have control on cost of carry for holding a position. Consistent with this, we find that traders who engage in order slicing more often are more active and large size traders. So firstly, we'll give you the reason to trade in order slicing is basically you must be knowing that if you are trading in futures and options in Nifty and Bank Nifty and in any other stock or index, there is some cap which is imposed by the exchanges that above this order you cannot place. For example, for Nifty, there is 1800 quantity that comes to around 36 lots. So you cannot place in a one single order more than 1800 shares for Nifty, and for Bank Nifty it is 900 shares. And same thing for different index and different stocks, there are different amount of cap which is imposed by the exchange that in a single order you cannot place that much amount of quantity above that much amount of quantity. So with order slicing, what we have done is we have given you an ease where if you want to trade in a big quantity, you can place that big quantity and then divide that big quantity in a baby order and then can execute it into the market without basically having a trouble of executing one order at a time of 1800 quantities, and then you execute one order at a time. But in order slicing, you can execute it in one single order window. How? Let us understand with a real-time example. So I will just showcase you our trading terminal, and I will make you understand how you can use this facility in our Pro Terminal. So this is the Pro Terminal, which is our advanced trading portal. So this order slicing functionality is only available in our Pro Terminal, that is the advanced trading portal. So now suppose I will take an hypothetical example that you want to go long on 18,200 call option, which is quoting at 18 rupees, and you want to buy 5,000 shares of 18,200 call option at 18 rupees or below that, whatever price you want to buy. So how you can do it? Let us understand through order slicing, because since we have a cap of 1800 quantity, it's difficult to execute 5,000 quantity in a one single order window. But with order slicing, you can do it. So let us see. So here, suppose 18,200 quantity, you want to buy 5,000 shares, and suppose you want to buy it 12 rupees, which is lower by 6 rupees. That is 12 rupees. There is a limit order you want to place. Whenever it comes to 12 rupees, you want to buy 5,000 shares. And since it's more than 1800 quantities, you always have to do an tick to order slicing to execute this 5,000 shares in one single order window. So once you click on order slicing, there will be two boxes which will get auto populated. That is quantity, and the second one is the price. Now, quantity, you have two options to slice this particular order, either in number of orders, how many orders you want to basically distribute this 5,000 shares in how many baby orders. So you can also, based upon that command, that particular 5,000 shares will get distributed depending upon how many orders you want to slice this 5,000 shares. And also you have an option that that is known as quantity per slice. That means that at how much quantity per order you want to distribute this 5,000 shares, that to divide this 5,000 shares, how much quantity per order it should be. So let us understand with both these examples. Suppose you give it at 5 orders, number of slices should be 5. So the 5,000 shares would be divided into 5 particular orders, that is 1,000 shares each, and that will go into the exchange. Let us see. Once you click on slice, you will be able to see that 1,000 shares. It is divided this 5,000 shares into 5 orders. So it comes to 1,000 shares per order. If you don't want as per number of orders, if you want to as number of quantity, that also you can do it. Suppose you do 550 shares, you want to slice this 550 shares, and you want to distribute this 5,000 shares into per order basis, and 550 shares should be of per order. So once you click on slice, you will be able to see this 550 shares has been distributed into number of quantity. How many? If you just total sum this up, all 550 shares, and then if you see that is 5,000 shares total order has been will be executed in the exchanges. So this is how you can slice this order. Now let us understand. So for a ease, we will keep it as 1,000 shares for quantity per slice. So that I'll just reset it. Yeah, so quantity per slice would be 1,000 shares. So my 5,000 shares would be divided into 1,000 shares each. And then in price, I have an option that at what price I want to initiate this. Either LTP will take it, whatever it is last traded price. Then you will be able to see if you want to take it as a bid or ask or mid. And also there is an option called as limit. So if you click on limit, that means what if you want to place this order at 12 rupees, which is lower than current market price, then you need to be careful and you need to select limit and then click on slice. So once you select limit and then click on slice, you will be able to see that 1,000 shares, that 5,000 shares has been divided into 1,000 shares each order, each baby order, and had been placed at 12 rupees, which was the limit price which you had referred over here. So 1,000 shares at 12. So 5 orders will go into the exchanges at 12 rupees. Now there is one more additional feature or functionality where you can use it is basically once you do quantity per slice is 1,000 shares, then there is an option if you want to place your first 1,000 shares at 12 rupees and subsequent orders at every 1 rupee interval lower, that also you can do it. So here you will be able to see if you select, remember you need to select limit over here, and then you need to first check at what price you want to place the subsequent orders. That is 1 rupee lower, that means minus. There is 2 tab over here, that is plus or minus. So if you want to place lower at the limit price which you have mentioned, you need to click on minus, and then you need to give the step how many rupees lower should be the subsequent order. So 1 rupee lower at every 1 rupee lower if you want to place for the subsequent orders. So here in step up or down factors, you need to mention it as per ticks. For 1 rupee, there is around 20 ticks would be involved, because one tick, if you can see here, is 5 paisa. And if you want to place it at 1 rupee lower, if one tick is of 5 paisa, so 1 rupee consists of 20 ticks. So you need to mention here 20 ticks. And once you click on slice, you will be able to see your first 1000 shares will be placed at 12 rupees. Second 1000 shares will be placed at 11 rupees. Third 1000 at 10 rupees, and so on. So here not only you can place it at one single price frame, but also you can place this order at a subsequent price level if you want to place it, and if the client wants to basically buy it at a multiple price so that they can average it down. So in one single order window, that can also be done, could be placed at different prices. However, that you need to mention it in price step up or down factor at what prices at what price interval you want to place. If you want to place it at every 2 rupees interval, you can go for a 40 ticks, because this step up or down factor is based upon how many ticks lower you want to place on the initial limit which you have set. The subsequent orders, how many ticks it should be lower. So if you type as 40 ticks, that means it will go 2 rupees lower. The second order will go at 2 rupees lower, and so on. All the subsequent orders will be placed at 2 rupees lower. Let us check with that example also. So here you can check, first is at 12 rupees, 10 rupees, 8, 6 and 4. So here order slicing, not only you can place the fresh buy orders, but if you want to place a square of orders, if you have accumulated 10,000 shares of particular option, and then if you want to square off this order, rather than placing an individual order, it is always helpful that if you place it through order slicing, it will be quite easier for you to place all these 10,000 shares. If you have bought through order slicing, you can also square off your order through order slicing and also take a fresh initiation order. However, a couple of things which you need to be careful of. The first thing is, whenever you initiate any positions through order slicing, there is a fresh position. Whenever you initiate the fresh position, now to execute in order slicing, first you need to transfer your fund from your bank account to your trading limit. Then only it will get executed. If the subsequent, if you see here, if you want to buy 5,000 shares at 12 rupees, that means you need to transfer approximately 60,000 rupees of amount would be required plus brokerage. So net around 60 to 65,000 rupees of margin would be required if you want to place 5,000 shares at 12 rupees. So you need to transfer first that 65,000 from your bank account to your trading limit, and then only you need to place this order. If you don't do that, then this order will get rejected. So here in the order slicing, you won't ask to hold your accounts from your bank account in the journey of placing the order. But first you need to transfer the fund from your bank account to your trading limit, and then only you need to execute this order facility. So I hope it was quite interesting of order slicing. Now, how to transfer the funds, I know you'll be knowing it, but then I'll just make you understand. Go to accounts, after that in security, hold and release. If you go to accounts, in fund, hold and release, you will be showcased in which account you want to transfer the fund from the bank account to trading account. You can select this amount and whatever fund you want to transfer. Suppose you want to transfer 5,000. So I will just click on hold, and once I click on hold, this amount will be transferred from my bank account to the trading limit. So this is how easy order slicing feature is. So now let us understand with different order type is called as the bracket order. Now, what is bracket order? A bracket order is a cover order type where you can create the first leg positions at market price and simultaneously can need to place a square of order for profit booking and a stop loss from a single order panel. So this helps to limit downside and lock in your profit and loss. So bracket order, in short, if I make you understand, that is a 3 order types. it's a three-leg order type. The first order would be placed at a market, and your subsequent orders you can place in the same order window, like target and stop loss, that could be placed in the same order window. So this is a three-leg order functionality. Your first order will by default go at a market price, and in the same order you can place the target and the stop loss. So if any of the target and stop loss gets executed, your second order will automatically get cancelled. So bracket order also comes with a trailing stop loss functionality, which could help you to minimize the loss further. In derivatives right now, bracket order is only available for index futures and stock futures segment. Bracket orders can be placed only in web-based portal, that is N-Trade and Empowered. And bracket order once placed cannot be cancelled, it can only be modified. It can only be modified at market price. So let us understand how you can place the bracket order functionality. So as I told, bracket order functionality can only be placed in N-Trade and Empowered, and it can only be placed in index futures and stock futures. So let us see. Suppose if you want to place an order in index futures or stock futures, so how you can do it, let us understand through bracket order. So here, if you need to click on buy. Now suppose you want to place this order for Nifty future. So first you need to select derivatives. Underlying should be Nifty. And here to place the bracket order, under margin you need to select cover, and under market you need to select bracket. So once you select this, so here you will be asked to place a book profit price and also your trigger price and the limit price, that is stop loss. And your first leg order, as I mentioned, it will be at the market price. So here your first leg order will be by default be at a market price. Now in this same order you can place the book profit price. Suppose I want to place this I want to book profit at 18,300. Current market price is 18,112, and simultaneously I want to place the stop loss at 17,900. The stop loss, I hope you are aware that in stop loss price you need to place two price, that is the trigger price and the limit price. Here limit price will automatically come. If you want to change, you can change limit price also. So once you do this, once you place this order, right now it's offline, I won't be able to do that. So once you place this order, your first order will go by default at a market price, and subsequent orders like target and stop loss can be placed at a single order panel, wherein if any of the orders get executed, your second order will automatically get cancelled. So it also comes with a trailing stop loss functionality also. So if you want, you can use that trailing stop loss order functionality. So here trailing stop loss, we will make you understand while we cover the trailing stop loss order functionality and how it can be used. So this is how you can place bracket orders. However, bracket orders can only be placed under index futures and stock futures, cannot be placed under options, that is index options and stock options of now, and it can only be placed in web-based portal, that is N-Trade and Empowered. Now let us understand of one more order types called as GTDt orders, which is also called as good till date order. Now what is GTDt orders? Let us understand. So GTDt orders is basically to take advantage of enhanced validity for your trade order and enjoy the freedom to buy or sell derivative contract at a specified price through our GTDt order functionality. In GTDt orders, it allows you, as of now, it allows you to buy or sell index futures and index options at a specified price till a predefined validity date. And this order will remain in effect until executed, expired, or cancelled till the validity date. So basically, GTDt orders is only available in N-Trade and Empowered, and only in index futures and index options you can place this order types. Now, this order type is basically will help you if any of you take positions in index futures and index options, and if you want to place any buy positions or sell positions at a specified price, and you want to remain this order open for a selected validity date. Eitherly the validity date maximum would be the expiry day. If you want to make these positions open, you can do it easily and select the validity date, select the price you want to buy or sell particular index futures and index options, and the same can easily be placed through GTDt orders. So at that particular validity date, this order will remain open. If the particular price comes, your order will automatically get executed, or else it will get cancelled on the expiry day if it's not executed. So let us understand how to place the GTDt orders through our web trading portal. So as I told, it is only available in Entrade and Empowered in our web trading portal, and GTDt orders can be placed only in index futures and index options. So let us see, suppose you have bought 4th May 18,000 call option, which is currently quoting at 106. Suppose you have bought it at 110 or 120, and you want to place a GTDt orders, that is, you want to place a stop loss GTDt order. Suppose if any time it goes to 80 rupees before 4th May, I want to square off this position. So what you can do, you can click on minus. Here you need to click, you can click on place GTDt order. So once you place GTDt order, you will be asked at what validity date you want to place. The maximum would be the expiry of the expiry date of this contract, because after that there is no point of putting this order once this contract gets expired. So maximum day you can put it for the expiry date at what day this contract is getting expired. So I will put it at 4th of May, which is the last day for this contract, because it gets expires after that. And then I want to place the stop loss order at 80 rupees. And limit price would be at 79. And once I place this order, and once I confirm, so this order will automatically go into the exchange till 4th of May. This stop loss order would be valid at 80 rupees. Whenever till 4th of May 80 rupees comes, this order will automatically get executed. So no need to place this stop loss order on a daily basis. You can place and define, and on a single day, on a daily basis, we will put this order in the exchanges till 4th of May, whatever date you have defined here. And whenever the rate comes, this order will be executed. If the rate doesn't come, then this order will automatically get cancelled. So this is the beauty of GTDt orders, which is also called as good till date order, and which is available in index futures and index options. Now let us understand within another order functionality, which is called as off-market orders. So now if you want to place off-market orders, there's an orders after the market hours that can be done in derivatives market, and it is only available in index futures and index options. So these off-market orders lets you place buy or sell orders in index futures and index options after market hours. These orders are sent to the exchanges on the next trading day. You can place an off-market orders which is scheduled at 7 p.m. to 9:30 p.m. after the market hours, and on the next day midnight 12 o'clock to next trading session 9 o'clock. So these are the specified times where you can place the off-market orders. That is after the 7 o'clock to 9:30. Between 7 to 9:30 you can place after the market hours in the night, in the evening, and then on the midnight 12 o'clock to next trading session 9 o'clock you can place this off-market orders. So an off-market orders can be placed with a limit price only. It cannot be placed with a market price, and limit price should fall in a range as mandated by the exchanges. Orders are sent on the exchanges on the next trading day. Even if you are busy during the market hours, you can place an order later for the subsequent trading day. Limit orders can only be placed in index futures and index options, and you can modify or you can cancel off-market orders anytime before it gets triggered. This facility is only available in Entrade and Empowered. So let us understand about the off-market orders. So it's a usual orders. Any orders and the placing of orders doesn't have to there is nothing different on the usual orders which you place in the market hours. So any orders which you place after the market hours have been termed as the off-market orders, and you need to order to the timing which is mentioned over here. Between this timing you can place this off-market orders, and it's a normal order. Once you place this order, suppose you want to buy it at 15 rupees, and if you place this order and if you confirm this order, then your off-market orders will be placed. So if you check in the order book, and you will check that this is my off-market orders. I placed it at 15 rupees, and it have got it is now showing pending. And tomorrow and Monday is also holiday. So Tuesday, this order will get shoot into the exchanges. of 18,200 call option. So that will shoot into the exchange Monday. So right now I don't want to place. I'll just cancel this order first. So this was all about off-market orders. Now let us understand about one more order facility is called as rollover spread. Now what is rollover spread? What is rollover? Firstly, let us understand that rollover involves carrying forward of futures positions from one series to the next one, and a rollover consists of two actions simultaneously. That is, you close your existing positions of the current month and take the same positions in the next month. Now this process is called as rollover. So rollover only happens in futures. It doesn't happen in options. If you are a futures trader, this order facility is very much useful to you if you want to roll over your position. Initially, what used to happen is you first close your existing positions and then reopen. If you want to roll over your future, then reopen your new positions in the new series. So you need to basically there is a two order types which is involved in it. But here, if you want to roll over your futures positions, it is very useful for the it is very useful if you use this rollover spread functionality. With this functionality in one order window only, you can basically roll over your futures from current series to the next series. So now, as I made you understand, with the help of rollover spread window, now you can roll over the future position. It's a single order panel. Now, what are the advantages of rollover? You can save your time basically to roll over your future positions. So by executing two trades, now you can execute in a one single order trade. So here you can save your time. You can roll over your stock or index futures in one single order window. You can also place your desired bid or ask spread to roll over your position. I'm sure any of the futures trader, they must be knowing it that if you roll over your position, there is some difference of different of price which is there, which is called as the rollover cost. So here you can just specify at what rollover cost you want to roll over your positions. So if that particular rollover cost comes, your position will automatically get rolled over. So in high volatile market, this feature is very much helpful because to roll over quickly, because it helps you to roll over quickly and with desired spread without any slippages. And this feature is available for index and stock futures both, and it's only available in N-Trade and Empower. So this is the N-Trade and Empower portal. Let us understand how you can roll over this. So now suppose you have a Nifty positions of May and you want to roll over your future from May to June. How you can do it? So under derivatives, there is an option called as spread order. So once you click on spread, now click on Nifty. Now here you will be able to see at what month you want to roll over your position from May to June, from May to July, or June to July. So you have May and you want to roll over your future. You have one positions in May. You want to roll over your future from May to June. So you need to select May to June. So once you select on May to June, here ideally since the market is not open, so here you will be able to see the difference between May month and June month, which we call as the rollover cost. Here you will be able to see what is the difference between that, and based upon that you can specify. Suppose you want to roll over this at 65 rupees. Around 65 rupees was the difference which we had checked. So 65 rupees. So automatically what will happen? Your May month will get squared off. That is, will get sold, and same position that is in the June month will get bought. So here, if you place this order, and since I don't have any positions in Nifty, so I won't be able to place this order. And also it's an after the market, you cannot place this rollover order functionality, spread order functionality. So once you place this order, if the desired price difference between the May and June month is at 65, you can easily roll over your positions from your May month to next month. So here you can not only roll over your long positions, but also you can roll over your short positions. If you click on sell spread, so what will happen? Suppose you have a short positions in Nifty and want to roll over. So what will happen? In May month, it will get bought, and in June month, it will get sold. So this is how you can take benefit of short rollover also and also long rollover both. I hope this functionality is very useful and you are able to understand this functionality. Now let us understand about another order types called as trailing stop loss order with book profit. Now this is a very good functionality and it's a bit tricky, but if you understand it quite well, you will be able to place both stop loss order and book profit price in a single order panel. However, if you place two individual orders, you won't be able to place, because it in one either of the order it will ask you to basically it will ask you to ask for an additional margin if you place this single order for stop loss or order and book profit order to different single orders. So in any of the orders, it can ask you an additional margin. But through this trailing stop loss order with book profit order type, you will be able to place both your stop loss order and a book profit order in a one single order panel. So how? Let us understand. So a trailing stop loss order is an order type where the stop loss is also revised towards the target at the same tick rate when the market price of stock or contract moves in your desired direction. Now, this order helps you to minimize the downside by cutting the loss that can be incurred, and also it also provides an option to put book profit level at the time of order placement. So let us understand how you can place an stop loss order, a trailing stop loss order with book profit. So here, now this can be placed in N-Trade and Empowered only, and however, here you can place in all the segments, that is index futures, index options, stock futures, and stock options. Now, suppose I'll take an hypothetical example. You have 43,000 call option for Bank Nifty at 348 rupees. Now, you want to place a stop loss order and a target price order of this option. Now, you already have this option, as I made you understand. Take an hypothetical example. You have bought it at 350 rupees and you want to place stop loss and target. So, how you can do it? Click on minus. So, once you click on minus, you need to click on additional details. So once you click on additional details, there will be a trailing orders functionality which you need to tick. So once you take this trailing order functionality, it will ask you to place a book profit price and also the stop loss price. So here, if you want to place a book profit price, suppose you want to place it at 450 rupees to sell this option of 43,000 Bank Nifty of 4th May expiry. And simultaneously, you also want to trail your this stop loss order. So here, if you want to specify this at 50 rupees as your trailing stop loss order, at this every 50 rupees interval, that is whatever the current market price is, from that 50 rupees interval, your stop loss would be trailed. So once you click on 50 rupees, if you just click on trigger price, I haven't clicked right now, I will be clicking it right now. So I'll just click on trigger price. My first order will automatically will be placed at 298. That is difference of 348 minus 50 is 298. So first order will be placed at 50 rupees interval, my stop loss, and I need to define limit price, because in stop loss you will be knowing it that you need to place trigger price and limit price both. So if you place limit price at 290, should be lower than what is the trigger price. Now, if you place this order, both this order will be placed, your stop loss order and your target price. Now, what will happen in trailing stop loss functionality? Currently, it's 348. You have specified 50 rupees is the trailing amount. So whatever the current market price is, and difference of that is 50 rupees you have specified. So your stop loss would be trailed. Suppose it goes to 358, your new stop loss would be 308. It will also trail by more 10 rupees higher, because if the current market price increases by 10 rupees, it will take a difference of that, that is 358. If the current market price increases from 348 to 358, so from that 358 minus the trailing amount which you have kept is 50 rupees. So next stop loss would be 308. So this is how you can basically, this is how you can trail your stop losses, so that if in case it gets reversed, then you will be in an advantage. If there is any volatile market, then you will be in an advantage that basically your stop loss orders will be executed at a higher price rather than at a lower price. So this is a very good functionality wherein you can take the benefit of the increasing market, and if in case it gets reversed, then you can play, your stop loss will automatically be trailed at a higher rate. So, however, there is one more thing where you can do it. If you don't want to trail this amount, if you want to place it at 298 only, and if you don't want to trail this, if you don't want to trail this amount, what you have to do is you need to untick the trail at market flag, and here at trail at price you need to keep trail at price at a level which you have specified for the target price just below that. So suppose you don't want to trail this amount, you want to keep it at fixed up to 98 rupees only. So what you have to do here, you need to place at whatever price you want to trail this amount. Suppose you want to trail, you don't want to trail this stop price, that is, it should be at 298 and it should not be trailed. So here in trail it price, you need to feed in 449.90, just below whatever the target price you have mentioned. So 449.90, so it won't trail this amount till it reaches 449.90. Only after it reaches 449.90, your amount will be trailed, but by the time it reaches, your automatically your target price would be triggered. So this is the trailing stop loss order functionality, wherein you can place a trailing stop loss order also and normal stop loss order also. Now let us understand about one more concept called as margin calculator. Since as I made you understand, if you want to understand with how much margin will be required for any kind of an option trading strategies if you are doing it. So for that you first have to make sure how to calculate this margin calculator. We have a margin calculator in our HDFC Securities website, and in that you can check. So let us see the real-time example how you can check margin calculator from HDFC Securities website. So here what you have to do first, have to go and go for hdfcsecurities.com. Go to the website of hdfcsecurities.com. Under that, under products, under derivatives, there is an option called as margin calculator. So once you click on margin calculator, so here you will be able to check, suppose you want to buy one lot of Nifty future. So you have to select future index, Bank Nifty, whatever the expiry you want to select, how many lots you want to buy, and you want to buy or sell based upon that, and you can click on add. Here you will be able to see what is the future price, current future price of Bank Nifty, and what is the spot price of Bank Nifty. And once you click on add, and once you click on submit, it will help you to see that if you want to buy one lot of Nifty future, around 1,45,000 rupees of margin will be required. Now same thing, from you also want to buy one lot of Nifty future, and along with it you want to do a protective put strategy, wherein you also want to buy put option to hedge on the lower side. So it's in hedging positions. So I am sure you must be knowing, if you do any kind of an hedging positions, then your margin requirement gets reduced significantly. So here, if I add option index for Bank Nifty, I want to buy 43,200 put option, which is at the current market price. I'll select 43,000 put option. The current market price premium is 200 rupees. If I want to buy, suppose one lot only, I'll click on add, and then I will click on submit. So you'll be able to see from 1,44,000 rupees, the margin requirement reduces to 52,400. If you initiate both this leg, that is future and also put option, both this leg. Now, if you want to execute this order at this specified margin of 53,000, wherein you are getting a margin benefit of 92,000, because you have hedged your position and your downside has been protected if you are buying this put option. Since you are hedged this position, then the margin requirement reduces significantly, and through margin calculator you will be identifying that how much margin will be required if you do this kind of a strategy. Now, if you want to execute this strategy with just 53,000 rupees of margin, then first you need to initiate a buying put option where only a premium amount is involved, that is 203 rupees into 25, approximately 11,000 rupees of a premium would be dropped, and then you need to initiate a one lot of buy of Bank Nifty future, and only in 53,000 rupees your particular strategy, that is buying put option and then buying future, will get executed. So whenever you want to initiate any kind of an hedging strategy, first you need to initiate the leg where there is low premium, low amount of premium required, that is the buy leg of options. First you need to execute the buy leg of options, and then you need to execute the sell leg of options, or if any kind of in futures if you are doing it, then you need to execute the future transaction. So here you can execute this strategy in just 53,000 rupees of margin, and where you can get a margin benefit of 92,000 rupees. However, if you first execute the future, then around 1,44,000 rupees of margin would be blocked. And then if you buy 43,200 option at 203 rupees, then after that, this 92,000 of excess margin will get released. But if you don't want to do that, first initiate a buy leg of options and then initiate a sell leg of options if there is any, or if there is any futures involved, then initiate the future leg of option. So always be careful. And in squaring off an option or in squaring off a strategy also, first initiate the first square off your future positions or selling options, and then square off your buying of options to basically square off your options easily. So you need to be very careful if you are doing this kind of a strategy to execute in a lower amount. You have to be careful that you first initiate a buy leg and then initiate a sell leg of options if there is any, or if there is any future involved in it, then after initiating a buy leg of option, then initiate a sell, then initiate a future leg of particular symbol. So in this, your margin requirement would be lower, and you can take the hedging benefit into it. And squaring off of options or squaring off of any strategy would be first square off where there is high margin involved in it, like futures or selling of options. If you have done any selling options, first square off that particular leg, and then square off your buying options to easily execute your strategy, squaring off a leg of your strategy. So I think it's now easier how to calculate margin and how to initiate. Now let us understand a different concept called as basket orders. Now we have this functionality if you want to execute all the strategy in a one single order window. If you don't want, you can directly execute the strategy from here. If you want to buy or sell, then of course, first I told, first you need to buy the options. You just have to click on buy, login, and there will be an order panel which will auto populate it. And if you click on buy, it will automatically will be went to the exchange, and then you can buy this future. So you can do it in one order simultaneously. But if you want to place this order through a basket, placing this order in a one single order window, that can also do through our basket order functionality. So basket order is a functionality which allows you to place multiple orders at one time. So under this facility, you can place orders for multiple scripts all at once. So while creating a basket, you just create multiple orders for same or different securities and club this order together to be placed in a single go. So this helps save time as all the orders in the basket are placed together instead of placing each order one by one. Now, what are the features of basket orders? So one can create 5 baskets with 15 scripts each. So here you can create 5 baskets. It can be created for equity and equity derivative segments, and partial execution of basket is also possible. So let us understand how you can make use of basket order functionality. So I'll again go to our Entrade and Empowered where the basket order functionality it is. So here in equity, under equity, you will be able to see this basket order. So click on basket order. After clicking on basket order, there is a setting symbol in it. You need to create a basket. So as I told, only 5 baskets are allowed. So I'll just delete one of my baskets which I have made. So new basket, I will rename it. Suppose I want to do any Nifty strategy. So I will name basket at Nifty 5. Save. So once I made once I name my basket, now I need to select the leg I want to create in this basket order. So suppose I want to buy 18,000 call and simultaneously sell 18,200 call option, which is a bull call spread strategy, and I want to execute this strategy through basket order functionality. So let us understand. First, add 18,000 call option index Nifty 18,000 call. You will be able to see the current market price, what it is. If you don't want to check the current market price, you can always buy it at market price. Add order. Now, if you want to place a selling leg of 18,200 call option index Nifty, I want to sell 18,200 call. it will be able to see what the price is, 18 rupees. If you don't want to, you can also always you can click on limit and and specify the price you want to execute this. Suppose you want to execute it at 18 rupees, you can always select limit and then put the price over here. But if you don't want that, because in a volatile market, if limit price is not breached, then your one leg would be pending and only one leg would be executed. So if you click on market and click on add order, so if both the orders are market, then then both of your orders will be executed easily. If one order is at market or at one order is at limit, then there are chances that if any of the orders which is at limit, that cannot be executed because of volatility in price. If it increases or decreases while placing the order, then you might end up only for one leg. So it's always recommended, if you select market price, you want to execute strategy at a current market price, then you can select market. And once you add all of the legs which you want to do for this strategy, once you save this basket would be saved. Now go to place order basket. Under that, whatever basket name which you have given, in that you have added the leg, you need to select that basket. The basket was Nifty 5, so I'll select at Nifty 5. Now I need to first basically take both this leg and place this order. So right now placing this order would not be possible. So two things here you need to make sure. Here, if you add this leg and place this order, both this leg simultaneously or together, sorry, if you place this order together, then you won't get that hedging benefit which we were talking about. So you need to have both the margins, including the hedging benefit, if you want to place this order both in one single order window. But here, if you want to have a hedging benefit, then always recommend first you initiate a buy order from here, and then after initiating a buy order, then initiate the sell order from here. And make sure before initiating this order, here also you need to first transfer your funds from your bank account to your trading limit. Then only this order will be executed, or else this order will not be executed and it will hang into the system. So first, if you want to execute this order, how much margin is required, you can check it from your margin calculator over here, which we have made you understand. Once you check how much margin will be required, after that you can place this order, both this order by buying first leg, whatever the buying leg is involved, and selling leg is after whatever the selling leg is involved in it, and then place this order. But before that, make sure whatever the margin is required, you transfer your funds from your bank account to your trading limit, and then only you can place this order from a one single order window, that is through basket order functionality. So this is all about basket orders and the strategy margin calculator, how you can calculate margin from the strategy which you want to do. Now let us understand about HDFC Securities offerings and what are they. So first, we offer ₹20 per order brokerage plan. If you subscribe to our derivative value plan of ₹199, so you will get an if you don't have a brokerage of ₹20 per order in futures and options. So if you subscribe for derivative value plan of ₹199, you can get an advantage of ₹20 per order in brokerage, because in futures and options it is always, we understand that trading involves low cost. Basically, your cost of entry and exit of any of the legs should be lower. So for that, we have been providing ₹20 per order in futures and options, and also free access to Pro Terminal, which is our advanced trading portal. If you subscribe to our derivative value plan, you can also get a free access to our Pro Terminal, which is actually worth of 1,999. But for our derivative clients, if you subscribe to our derivative value plan of 199, you will get ₹20 per order in FNO and also free Pro Terminal. But before subscribing to derivative value plan, make sure that you have derivative privilege with you, and then only you subscribe to our derivative value plan. So one more advantage of from HDFC Securities is zero interest on derivative margin. So what exactly it is, let us understand. So here, if you want to trade in derivatives market and you are short of cash and you want to trade in derivatives, So what a facility we give in HDFC Securities is you can transfer, you can basically pledge some of your shares from your portfolio, and against that, whatever margin will be providing it, that is called as the collateral margin. You can use that margin to trade in derivatives market without any interest cost. So here we have taken an example. Suppose our competition do also provide this kind of a facility, but they take interest about about the facility which they provide on the collateral margin they allow to trade in derivatives market, but they take interest of around 18%. Now suppose if you trade this with a competitor where 1 lakh of margin is involved in it, and around 18% of margin has been charged. So if you hold for 1 month, so approximately 1500 rupees you pay as an interest cost. But the same facility, if you use with our HDFC Securities, if you use this collateral margin to trade in derivatives market, suppose you use 1 lakh rupees of margin, there is no interest charged to it. There is zero interest charged to it. So, and that you can use this collateral margin for how much of a period you want, for 1 month, for 1 day, for 3 months, 5 months. So you can use that margin. There is no interest charged to it. So this is a very good facility which you can use it. You can use your portfolio at a productive means, and it's a very good facility where you can use this. That is called as zero interest on derivative margin. So that's it from our end. I hope this session was quite useful in understanding various order types, which is our 5K features, and that will help you to basically trade futures and options in much more easier manner. So now we'll open this forum for a question answer section. If anyone has any kind of questions, we'll request you to write it on the question answer panel, which is there on the right side of the screen, and we'll reply you back. So we already have received a lot of questions. So let us first check. There is one question called as by Mr. Vignesh Prabhu is GTDt won't it get just triggered as the current market price is higher than 80 rupees? Then how do we differentiate the GTDt for profit booking and stop loss? So very nice question, Mr. Vignesh. So here what happens, let us understand. If you want to place a GTDt order functionality for stop loss and target, so how the system would identify that the GTDt orders is a stop loss or a target? Now let us understand with an example. So we have taken an example for the GTTD orders of this 18,000 call option. Now if you place the GTTD order and if you want to place it at higher price, then what happens is you need to place a trigger price at, suppose you want to place at 150 rupees. Here your limit price would be 152 rupees. And once you place this order, this will treat as a selling order. So if you want to place it at higher price, and that you can do it by your trigger price, your limit price should be higher than your trigger price. And if you want to place a stop loss order, then your limit price should be lower than your trigger price. So suppose if you place it at 80 rupees as a trigger, here your limit price would be lower. So it will automatically understand that this is a stop loss order. So this is how the system differentiates between the target price, your target price and your stop loss price in your GTTD order functionality. So Mr. Edney Afanso is asking, scenario, enter into new Nifty bull call positions with a target and stop loss, set target price and stop loss in an existing buy call positions. Would placing a separate order for an existing position require additional margin? Trailing stop loss order is a little tricky. In your explanation, why did you enter the limit price, as you can have already mentioned the target price and stop loss? So here, sir, firstly I'll just answer your third question, that is why need to place a limit price. So if any stop loss order, if you place, you need to place a limit price. Stop loss order is not a one price functionality. So your any stop loss order, if I am talking about, you need to place target price and limit price both together. then only your stop loss order would be accepted in the exchanges. You cannot place one order in a stop loss. So that has been answered. So here your second question was, set trailing target price and stop loss in an existing buy call position. Would placing a separate order for an existing position require? No. So if you place the trailing stop loss order functionality, your target price and your stop loss price in one single order window through trailing stop loss order functionality, there won't be any extra margin which will be charged to you. And the first question was, enter into a new Nifty bull call position with the target price. And so Nifty buy position, sorry, Nifty buy call position with the target price and stop loss. So here you are talking about the bracket order, enter into new Nifty buy call position with the target price and stop loss. So this is a bracket order functionality which is only available in futures right now. It's not available in options. So once you enter any Nifty positions with target and stop loss, it's not possible. First, you have to enter a Nifty call position, and then you can place trailing stop loss order functionality by placing the target price and the stop loss price in that order. But in one single order, you cannot enter the 3 legs, which is only as of now available in futures, not in options, which is called as the bracket order. So Mr. Mahesh is asking, the margin money requirement is quite high compared to other securities. Please look into this. So Mr. Mahesh, basically right now, if you check whatever margin, if you check the margin calculator, which we have showcased to you, whatever margin has been charged by the margin calculator, it is universal everywhere. If you find that the margin requirement is higher, please showcase us that margin requirement. Right now, if you check, all of the margin requirement are as per the exchange standards which we are taking it. And if you find that the margin requirement in this position is higher compared to whatever margin was been blocked, if you have done with different broker, then please showcase us. You can write us to service@hdfcsecurities.com, and they will pass on the mail to us, and we'll identify where the issue is. And if there is any issue, we'll surely look into this matter. But right now, best of our knowledge, the margins are as per the exchange standards, and whatever margin is required for any strategy or any futures trade, that has been charged as per the exchange criteria which is given to us. So one more question by Mr. K. Ramaswamy is, if we have both savings and trading account with HDFC, say 3-in-1 account, do we have to transfer margin amount in trading account manually, or it is done automatically? So very nice question, Mr. Ramaswamy. Basically, in only order slicing features and the basket order functionality, which we have made you understand, in only this both functionality, you first have to transfer the funds, irrespective if you are having it in HDFC Bank or in any other bank account. But in rest other orders like bracket orders, GTTD orders, off-market orders, all this, what will happen, we will block the amount in the journey. Once you buy any kind of an options, then that particular amount will be blocked. If you have it in, if you have your bank account with HDFC, then that will be blocked in that journey. You don't need to transfer the funds. So here, only if there is the bank account which is other than HDFC Bank, then only you need to transfer the funds. But if you have the bank account with us in case of other order types like GTDt orders, off-market orders, then that there is no transfer of funds should be needed. But order slicing and basket order, here you need to transfer your funds from your bank account to your trading account to use this functionality. Basically, if you also have an HDFC Bank or any other bank, the process remains same for both these order types, that is basket order and order slicing. Mr. Mahesh is asking, can collateral money be used for options buying? Collateral money can only be used only for where there is margin involved in it. So options buying, there is no margin involved in it, so you cannot use that collateral money. You can only use the collateral money to buy futures, sell futures, and sell options where the margin is involved in it. As Malesh is asking, any revisions in margin rules in FNO? So as of now, there is no revision in margin rules in FNO. but in HDFC Securities, we have done some revision. That is, if you, as I made you understand, if you do any kind of a strategy, first you have to initiate a buy leg and then initiate the sell leg for this strategy. But now, if you want to square off any strategy, first you have to square off your sell leg which you have initiated, and then square off your buy leg, so that your strategy can be easily executed, easily squared off with you. So there is one question by Mr. Mahesh is, can target and stop loss be put at the same time in an order? So in an order such that whichever comes first, that orders get executed. So that what we spoken about trailing stop loss order functionality. So in that trailing stop loss order functionality, so you can place the target price and the stop loss price in a same order. So whichever comes first, it will automatically get executed, and the other order will automatically get cancelled. So you can use the trailing stop loss order functionality. Yeah, Mr. S. Malesh Gaud is asking, yesterday for bull put spread, I have hold up full margin. Yes, we take into consideration yesterday there was some technical error. For that you have been asking full margin, but that was one technical error which was there, technical issues which were there in yesterday. So that's why you have been asked full margin, but we are into it. I'm sure on Tuesday this technical error should get should get rectified, and you will be now able to place this in the margin required, which is there as per your hedging benefit. So one more question is how to place large buying and selling orders. Mr. Munuswamy, as I made you understand in Pro Terminal, you can place large buying and selling order easily. So let us see how you can place. I'll just showcase you very in a brief. So this is a Pro Terminal. So through order slicing functionality, you can place large buy and sell order. So suppose you want to buy 18,000 to call option of 5,000 quantity in Pro Terminal at 12 rupees. So here what you have to do, you have to click on order slicing. Once you click on order slicing, you will be asked, you want to basically divide this 5,000 quantity in as per quantity or as per number of orders. Suppose you want to divide this as per quantity, suppose 500 shares you select. And since you want to buy it at 12 rupees and current market price is at 17 rupees, so here you need to select limit and click on slice. So once you click on slice, you will be able to see that all 5,000 shares has been divided into 500 shares per lot, and 10 orders will be there into exchange. Once you place this order and once you confirm, your order will be executed in the exchanges, and once the price comes, your order will be executed. But make sure to use this functionality. First, you transfer your fund from your bank account to your trading limit to use this functionality of how much margin is required if you want to buy 5,000 shares at 12 rupees. It is upon approximately 62,000 rupees of margin required, including tax. First, you need to transfer that fund, and then only you can execute this. So Mr. Umesh Kaushal is asking, please explain trailing stop loss again. Can trail stop loss be immediately in equity as well? Yes, trailing stop loss be implemented in equity as well. And it is also there in derivatives also. So let us understand with trailing stop loss order. I'll just make you explain it again. The trailing stop loss order is only there in N-Trade and M-Powered. So here, if you check, now suppose you want to place a trailing stop loss of 43,000 call option. Current market price is 348. Now how you can do it? So let us understand. You need to click on sell. You need to click on additional details and trail orders. So once you click on trail orders, you will be asked to place a book profit price, which is easy. You suppose you place at 450 rupees, and then you have a two option. Either you want to trail your amount, or you need to place your order at a fixed rate. So if you want to trail your amount at whatever amount you want to trail, suppose you want to trail at every 60 rupees interval, at current market price. So once you trail amount at 60 rupees, your first trigger price once you click automatically will come at 288. That is 348 minus 60 is 288. So what does this mean is basically at suppose it reaches from 348 to 350 rupees. So after 350 rupees, the difference of 60 rupees would be your new stop loss. So if this option reaches to 350, the 350 minus 60 will your new stop loss would be 290 rupees. So on your stop loss would be trailed at every higher price from 348. It will trail at every higher price, and you need to define limit also. That is, suppose you define limit at 280, because in stop loss you need to define two price, that is the trigger price and the limit price. Now the second thing, if you don't want to trail your stop loss, we need to untake this trail at market flag, and then you trail at a price. You need to basically put the price which is nearby the current, which is nearby the target price. So here, if you press as 449.95, so here after 449.95 only your stop loss will start getting trailed. Till that time it will be fixed. But what will happen after 449.95? The next tick would be 450, and your order will be executed. So your amount would not be trailed. Your stop loss would be kept at 290 rupees only. So if you want to keep your stop loss fixed at 290, that also you can do that. So this was all about trailing stop loss order with book profit price functionality. So there is one important question by Mr. Santosh, is brokerage structure in slides. So every baby orders will be charged as a brokerage. So the brokerage won't be charged in a one single order panel, how much baby order you make. So in the every single baby order, your brokerage would be charged. So Mr. Malesh Gaud, as I made you understand, yesterday was some technical issue where you were not able to get the hedging benefit, but I'm sure that technical issue will get resolved by Tuesday, and then you will be able to get the hedging benefit. Mr. Vignesh is asking, in the basket order, when we put both sell and buy at market price, how will it generate profit? Sir, this was firstly, Mr. Vignesh, the basket orders which we had generated is for two different strike price. It was not for a single strike price. So I have bought 18,000 call at market price, and I have sold 18,200 call at market price. So this was in the two different strike price. So, to make that basket, or to make that basically strategy execute, and I place it at market order. Mr. Suresh is asking, can we have a recording of this session? Surely we'll have this. We'll tell my colleague to upload this in our YouTube. Mr. Mukherjee is asking, can we place AMO along with trailing stop loss? No, only AMO orders could be placed. Trailing stop loss functionality is only for a particular day. I think we have answered most of the questions, so we'll conclude this session now. So I thank you all for attending this webinar. I hope this webinar was quite useful to you, understanding various order types, and it will help you in your day-to-day trading. So I thank you all for attending this webinar, and have a nice weekend to you all. And please attend all of the webinars we are having it in terms of MTF, in terms of pro terminal, understanding of pro terminal, also in terms of derivatives and equities webinar which we come across with various subjects. To upgrade your understanding basically in terms of in the particular subject. So we'll request everyone to please attend that. You will be informed via mailer, and also you can visit our HDFC Securities website. In the page, in the home page, you will be able to see what all webinars we have today. So based upon that, you can check the webinars. So this is the home page. So today we had this webinar, and you can check the webinars which we are having, and can register for it and can attend. So thank you all, and have a nice weekend to you all. Thank you, everyone.